Let's begin with the busy earnings parade, as we mentioned, Jim. You highlighted GE, GM, and Pepsi in Squawk.
Look, I think sometimes you just have these standout quarters. I mean, GM, when you saw their beat, it was a clear beat, and it was just on demand. What I'm focused on, and David, I think you can comment on these too, because this is really the crux of when we talk to Dow.
Yeah.
Demand, this is an economics class today. The demand for GM for their internal combustion engines was quite strong. And that's how you get the stock doing okay. PepsiCo, look, they were able to raise price. And like Coca-Cola, it didn't really matter. They sold a lot, particularly in snacks. I look at GE, though, and I think to myself, it's so back. It's incredible. He did it. David, he did it. And he did it in a way that you really want, which is that aerospace was strong, but that power and renewables will be good next year. For the first time, I felt like I wanted to own them.
It is, you get so accustomed to not believing in a way, right? That when there finally is a reason to believe, you still doubt yourself.
Yes, that's a great way to put it.
And so, I mean, the stock now is sporting a very high multiple, but it seems to be perhaps deserved given the growth rate that they've got going at GE now, Jim. But again, and you say it and you're like, really? Can that really be?
Well, Raytheon Technologies, they did have terrific commercial.
Yeah.
And so I know that that's fine. I mean, Carl, I think what David's saying, and I feel the same way, which is that we've come to look at GE as a company that reports its earnings kind of crazily each time. Looks different, different.
Yes.
This looked like what Raytheon looked like. I mean, it looked like an industrial, and it made me feel like it's not that it's back, because it's clearly back, but that it's a kind of high-class, high-growth industrial that people should like, except for they started liking it 60.
Right. First positive free cash flow for a Q1 in about 10 years, as they raise both adjusted EPS and the free cash flow down.
It's GM and GE are great stories today, because this is a story of storied companies doing well, but still having supply chain problems in the case of GE, still having what I would regard with Raytheon, less supply chain, but more wage issues. This is what happened with the airlines, by the way, yesterday. I think that people are asking, what would you do if you were the Fed? And the answer is, you don't feel great. You see companies having to raise price again. You talk to PepsiCo. I thought PepsiCo was going to see in the second half, like Coca-Cola, a moderation of price increase, a moderation of their costs. No, definitely not. And that's worrisome.
At the same time, there's always a UPS. You mentioned Verizon. There's Packaging Corp last night, right?
I hesitate on UPS. I mean, I've not been a big fan of the company lately, which is not. I'm just looking at the stock. I don't have any great insight, except for the fact that Federal Express.
You believe Federal Express is, to use a term of art, just getting it together. You think FedEx is.
That's a new one. So Brady was taking out $5 billion in costs.
Right. And
now the fact that there were $5 billion in costs.
Yeah, it's not exactly. It's kind of an indictment of management.
Well, I was more thinking of it that I can draw a conclusion that it was not as good as I thought.
Okay.
But look, Fred Smith created a moat. You can't go against them. And that's why I want to buy FedEx into the UPS weakness. How about that?
So is the momentum shifting in some way?
Well, I think that FedEx has so much earnings to gain. The leverage there is very, very big. That's what you're playing, the leverage. UPS did guide lower revenues. They made me feel like e-commerce is not going to be great in a week when we better hope that e-commerce is great, because we got a lot of it later on.
Meantime, if you're looking for economic bellwethers, I mean, 3M used to be thought of in those terms. They're going to cut 6,000 jobs. They're going to focus on auto electrification and home improvement. That's an eye-opener. Some management changes in there, too.
6,000 people laid off, and 3M, the healthcare division is good. What I'm most concerned about with 3M was not really covered, which is these lawsuits. The combat arms, the vets are fighting exactly what the people are fighting when it comes to J&J.
Right. Yeah. I mean, you've still got PFAS too, don't you?
PFAS, which is just that sticky. By the way, J&J doesn't have combat arms problem. I'm saying
no. J&J has the talc issue.
Right. I just didn't want someone might say, "What is he talking?" They also made earplugs.
But you're talking about the earplugs that 3M made. That there's a very large lawsuit.
Right. But what I like about 3M,
loss of hearing.
Look, Mike Rome is not in denial. He knows he's got to do something here, and that's important. It's very important.
He hasn't joined us in a while. There was a period where he was a frequent guest.
I think he'll come back.
Yeah.
I do. I do think that they need to have all these the companies that face these giant class actions have to have some method to be able to make it so that they can put a pooled capital in and then pay off the plaintiffs without these endless lawsuits. Both 3M is trying and J&J is trying, and so far the courts are kind of neutral on it. Neutral is the way I put it.
Verizon, another one that you could also argue is at least reflective sort of the consumer economy. After AT&T's terrible quarter reported last week where their free cash flow and was below at least what analysts had anticipated. A lot of focus on this. What can I tell you? Consumer postpaid phone losses seem to be sort of in line with a lot of what the analysts were looking for. They lost 127,000 postpaid phones. 263,000 were consumer. That was offset in part, though, by adding business lines. Free cash flow actually was okay.
Yes.
But there's a question as to the timing there, but it was better than expected, better working capital, maybe timing of device payments a bit different. But they did reiterate their guidance as well for 2023. But, not a great quarter, but not any worse than feared.
No, but you did.